On the No Account for Taste podcast this week, we are live from the HQ of Accounting Excellence Triple Award winners, Flinder. Hey! Hello, I'm Richard Hattersley, and welcome to the 50th edition of AccountingWEB's No Accounting for Taste podcast. To celebrate, we are joined this week by Accounting Excellence royalty. Yes, many have questioned what it takes to win a prestigious Accounting Excellence award. It's a good question, but today we'll go one better and find out what it takes to win 3 Accounting Excellence Awards. Yes, we're here in Flinder HQ in the shadow of the Shard, and we have the perfect person to ask. It's Triple Award winner Alastair Barlow from Flinder. Hi, Alastair.
Hey, Richard.
Thanks for welcoming us here today in your wonderful offices.
Yeah, it's fantastic to have you here.
And stopping by the office is the Managing Director of Majors Accounts & Co. And Accounting Excellence panellist is Ariana Bakrakute.
Hiya.
Ariana, how did I do with that pronunciation?
It was in that region.
It was in that region.
Yeah. I have trouble with it myself, so don't worry about it. It's fine.
And as I pulled into Paddington Station from Bristol, who should I find on the platform standing there like Paddington Bear? Why, it's AccountingWEB's editor, it's Tom Herbert.
Hi, Richard. I can neither confirm nor deny that I have a marmalade sandwich under my hat.
I'm just imagining open arms on the platform and slow motion running right now, that's all.
Before we talk about the week that was, Alastair, we can't go any further without talking to you about the month that was. 3 Accounting Excellence Awards.
Yeah, it's pretty epic, actually.
So
back to back as well, on and off the stage.
Shortly after the event, you tweeted your Fitbit heart monitor.
Yeah, I did indeed, yeah.
And that was showing just the craziness of the night, really.
Yeah, it's a bit of intensity there. A peak of the heart rate as the awards, as the different nominations were up on stage, and then moments before we got the call. So yeah, huge peak, and it just kept going up one time after another for all 3 awards. So yeah, data. I tell this to all our clients and all our team. Data tells the story.
So let's go through the awards. It was New Firm of the Year.
Yeah, that's right. New Firm of the Year.
Innovative Firm of the Year.
I think it was it Fast Track next?
Track.
Or either which way. So Innovative and then Fast Track.
Fast Track.
Yeah.
So you was there no more awards you wanted to win that night then?
I
wanted to save it for other people?
I think you guys capped out at 3 entrants. So maybe if you open it up a bit more next year, we'd happily enter. But no, I think incredibly proud and honoured to have taken home 3 awards that night. You know, we've worked pretty hard in terms of our strategy and kind of what we do and our approach to everything. And for us to walk away with 1 award in that evening, we would have been immensely proud. But to walk away with 3 awards and them being back to back, it was just super special, to the point where I debated the 24 hours after that. Do we do a Rosberg or a Hamilton? I'm a big Formula 1 fan, so Hamilton's obviously keeps trying to do every year win, whereas Rosberg just he capped out when he was on top. And so I don't know how we could ever top 3 awards in one night again. So we might just go, yeah, we're retiring.
Well, this is the last public appearance for Alastair Barlow. No, I'm sure you'll be back next year. And where are you keeping the awards?
So the awards, I keep them in my bed next to me and cuddle them every night when I go to bed. Now they're in the office. Flinder is a team sport, and we keep them in the office. Pride of place just under the Flinder logo, all next to each other, so they feel nice and comforting. So that's where the triplets are. Yeah.
Yeah, I mean, I think it goes without saying. I mean, as sort of one of the head judges on the awards. Awards are a very, very tricky thing to offer. We get a tremendous amount of stick every year of just, the process isn't transparent, etc. and so on. It's a tricky balance to strike. Firms are submitting quite sensitive information to us in a lot of cases, but I think it's fair to say, I mean, having read literally hundreds of awards entries this year, Flinder really was a blueprint on how to enter an accountancy awards. Very specific targets. I mean, without being too granular, here are 3 or 4 of our top targets. Here's how we're going to achieve them. Here's how we are doing so far against those targets. It was really good. It cut off the fat, no fluffy stuff. It was really good.
Yeah, thank you very much. I think it is genuinely very hard to do because you're constrained by words. by word count. It's very difficult to get as much content as you want in there to get the point across, but it is by being short, sharp, and to the point.
And I'm sure we're going to find out a little bit more about the secret sauce behind Flinder's success as we move throughout the podcast and we look at the top stories from the last fortnight. I'm sure as we talk about that, some of that secret sauce is going to come out and we're going to find out a little bit more how Flinder does things. So let's start with the top stories from the last fortnight. So at number three, the third most read story on AccountingWEB was from our regular agony uncle, Nick Elston, the mental health coach. Nick, he regularly helps practitioners who have struggling with anxiety or mental health issues. And in this particular episode of Nick's regular column, he gave advice to a practitioner who lost their practice mojo and they couldn't tell whether they should sell or just systemize their practice. So this was an interesting one this week. And although rather than just dwelling on what was in this article, I think it spawns many other conversations about how you just can keep motivated and keep that drive going. And Alastair, this was something that was that came out of your award entry in particular about just how you stay ambitious to be able to get those 3 awards. There must be a big vision. And in your award entry, I think you spoke about a 10-year plan.
Yeah, that's right. And I think just kind of relating to the story, just briefly, I think everybody is going to have doubts at certain times. So I think people will always question what they're doing at certain times. And I don't think that's a bad thing. I think it helps kind of remain fresh, and I think it helps remain relevant as well. So I think that's a good thing. I think in terms of Richard, what you're saying about our 10-year vision. So if people don't know, we left a Big Four firm less than 3 years ago, and we set up Flinder. So Flinder's a very new business, but we left there with very, very strategic ideas and plans of what we wanted to achieve in a 10-year vision. So we set that out, 10-year vision, stripped it back for a 3-year plan, and then obviously 12-month plans, which kind of get updated as and when we kind of rotate through the 12 months. So that 10-year vision, which I'm not sure if I've shared publicly or not, essentially is we want to be a top 50 firm by revenue, which is bloody bold vision to have, and you know, potentially nigh impossible, but that's what we want to achieve, and we know exactly what our growth needs to be each year and how we need to harness that and develop a strategy that underpins it. And I'd say it rolls back to 3 years and then 12 months, which are very, very tangible in terms of what we're trying to achieve. So yeah, absolutely. We're kind of focusing on the end game here, and that's what we're all about. And
Ariane, is that something which having goals and having a vision, does that keep you going as the managing director of Majors?
Yeah, absolutely. So I took over this year officially, and in that time, my goal was to go digital, and we're in the process of doing that. We're pretty much almost there now, and the next step is to restructure how the staff work at the moment and work together with clients to get on board with the new digital era and give them more information on how their businesses are doing. So basically work together how they can grow as well, not just us.
So sort of having those goals sort of keeps you going, and with this practitioner in particular in this story, they would seem to be suffering because they'd lost their mojo. I think maybe goals have slipped off their agenda and they weren't as focused on the day-to-day life as well.
Yeah, I think there's a point in there. A goal doesn't necessarily have to be revenue based. You know, it could be that I'd like a fantastic family holiday in the Maldives at the end of the year. You know, I'd like enough money to be able to do that. Or it could even be I'm planning to exit the business in 5, 10, 15 years. Here's what I need to do that to keep my practice going. So, you know, and I think I mentioned off air while we were rehearsing there's a definite mindset issue in there. We've gone through a lot of digital transformation over the last decade, and so whether you have, and you know, I'm going to invoke the spirit of Carol Dweck again here of just talking about a growth mindset, and it's not really an age thing. It's just an ability to adapt to certain things, and I think certainly with your practice of just sort of taking it from a traditional to a digital firm is challenging. I'm sure you'd agree.
Super difficult. I think it's changing the mindsets of staff initially, which I would have thought would have been a bit easier, but no, they're probably, that was the most challenging thing. But now that they're on board, now we can move on to changing the mindset for clients as well. But yeah, this change is super difficult to, it's just making sure that you've got that mindset to be open to the change.
I think without getting too fluffy for accountants, right, I think whilst I've said this is our strategy, our vision, and kind of underpins it, I think in order to stay true to that, there's whether it's a golden compass or a golden thread that runs through, it's your why in life, or your why in the immediate term, or the kind of, the long term. There's something there that harnesses you and actually gets you driven. So, whilst we've got a strategy and a vision to do that, yeah, we could get sidetracked or, have good days, have bad days. But actually, it comes down to what's kind of underpinning that. What is your drive in life? What is your, if you have a growth mindset, what's driving that growth mindset? What's kind of the burning desire to do that? And I think that's what a lot of driven people have, and I certainly have that as well. And it's nothing to do with work. It's something else in life, and so that's what really drives me, to be perfectly honest.
And it's important as well, just learning from your peers as well, just talking about the challenges and the strategy with your peers in order to help you get through some of these challenges which our man in this story is suffering from.
I actually would say that's what's helped me out a lot. I think you can feel quite alone when you're in your own practice. You go through quite a few challenges and you think, is this just me? Because you see other people with social media now and marketing. It just seems amazing. You don't get to see their bad days, but when you actually speak to them, it's like, okay, we have got the same challenges and maybe we're not doing something that's so wrong. We're kind of on the same path, so it's quite reassuring, I think, and it's quite good speaking to other practices. What do you think?
Yeah, no, I completely agree, Ariana. I think the difference maybe, or the challenge you have that maybe we don't have, is that we have Luke and I have each other, and so Luke, my business partner, who was with PwC with me as well. That's by design, though. We set up that we were fortuitous enough to have that, to be in that position where obviously you've got a legacy that's a little bit different. So we set up blank canvas, completely different operating model in terms of business structure. Equally, he and I have each other to bounce off those challenges. So I could have a great day where he has a shitty day, if we can say that on here, and vice versa. And so we continually push each other forward. And most of the time we have great days together, but occasionally we don't. And actually we help each other and drive each other forward. So, but equally we reach out to peers as well, because it's good to see what's going on behind closed doors in other firms, because everyone can learn from everyone.
And that's why we're here at Flinder today. We're going to be looking through the drawers. We're going to be seeing...
Not sure we have any. If you look around, there's no drawers here.
Another thing which I think is quite important, especially with when it comes to well-being, is just having that culture within your firm and your team to make sure that with this practitioner in particular, where they've lost their mojo, just having everyone come on board to ignite everyone's mojo. I think that's really important. Ariana, you said as well that culture is really vital in your firm, in particular being a family-run business as well. I'm sure that helps, having that supportive environment.
No, absolutely. That's one thing that we've advocated from the start, because we are family-run. So my father started it initially, and then I came on board. My mum as well came on board, and then everybody joined after that. But one thing that we always said is we would like to try treat each other like family as much as we can. Now in family, some people argue, some people get on, some people don't, but that's just the dynamics of having a family. But having that support network, so making sure that if somebody is in trouble, they're not sure what to do, they've got a difficult situation, you've always got somebody there to help you out. It's making sure that we speak to each other and talk about any issues we might have, not try and deal with them by yourself, which could make it a lot more difficult. And by doing this, we have also created a culture with our clients as well. So where we try to treat them like family as well. Because I think a lot of businesses go to, when you say I've got to go see my accountant, they're like, oh, I've got to go see my accountant, But with us, they're really open. If they've got any issues that they're not sure about, because with tax, we deal with mostly small owner-managed businesses. They can get really stressed out with tax. They don't know what it means, what obligations they have. But being able to speak to us freely kind of calms them down and creates a much better relationship between us and them.
And Alastair, culture seems like a really important thing for Flinder as well. We've all heard about the Flinder ski trip as well. So how important is culture here?
So despite all the technology that we use, which we use a lot, we're a people business, and people are the engine to an accounting firm, and we see culture as the oil to that engine as well. And so culture is hugely important. So culture and values, we recruit to our values. We ask questions around our values in the recruitment process. We every week talk and live and breathe our values. So an example of that is on a Monday morning, we select some people and say, okay, volunteer how someone else has exhibited our values. And so they volunteer someone else, they give examples of it. We cheer for that, and then they choose someone else. But if they're not doing something that's exhibiting our values, then we ask, what on earth are they doing? Because they should be. So culture is very, very important to us. It's kind of what binds us together and keeps the momentum going forward. Gives everyone that mojo, and we work hard and we play hard. We do the great things like Flinder takes the piece skiing, we have frequent socials, and whilst we're not family technically, Ariona, to your point, we feel like a very, very closely bonded team, and we hang out together, and so really like the people and the culture is the nucleus of our growth, really.
And this story actually overlaps with another popular story from the last week, which was from the co-founder of Mizuma Accountants, Lucy Cohen, where she discussed her experience coping with anxiety and how she deals with the negative side of it whilst fully embracing the positive. And again, this is both of you, similar to Lucy, attending many conferences. We hear a lot about the bad side of the always-on culture, but in order to grow your business, there is an element of always being on the road and getting your face in the right places. So how do you both manage that? How do you both cope with the stresses while still having that swagger of confidence in order to make it through the day?
I think with me personally, it's actually quite a good opportunity to get out of the office and think about what you've done. Because I think when you're in the office, you can really get stuck into the day-to-day operations. So for me, it's more of a kind of a breath of fresh air, and it really reignites the passion that I had for the practice and changes that I want to make and things like that. So for me, I enjoy that. That's one of the greatest parts of it.
Yeah, I also love doing it as well, to be honest. I actually see it as part of my role. It's part of my role, and like if you look at me and look how we split up kind of the responsibilities, it's my role very much to be the public figure, to be the one that drives the business forward in terms of strategy and looks responsible for delivering a lot of the delivery of the finance side of things. So yeah, I think it's enjoyable. It's tiring. It is very tiring. It is, and it can be stressful in the roles that we have. But it's also very exciting.
You mentioned delivery there, Alastair, and I think that's a nice segue to move into our second most popular story of this week is pizza delivery, a different kind. Pizza Express, over the last fortnight, has had their share of troubles. So what do we make of this story? What do we think went wrong where we had Pizza Express suffering this crippling debt repayments? So, Alastair, I'm sure we were talking about this story before we hit record. What do you make of it?
So, I mean, it's interesting. So the stats were actually filed back in June, but I think this story only came about in the news in the last week or so, and it really came about because Pizza Express have actually been very responsible and hired an advisory firm to figure out how to restructure the debt. So they've kind of thought ahead. And being responsible to think about that. So just as a backdrop on this, Pizza Express, 650 or 627 outlets around the world, essentially revenues of about $500 million, but their debt is 1.1 billion on the balance sheet, and they've got a net liabilities position. And what's crippling is the fact that they've got interest repayments, which is roughly 20% of their revenues, which basically moves them from positive EBITDA to post-interest to a loss of about 50 or so million. If you kind of go under the cover a little bit more and see what's going on, actually about half of that interest is repayable to the parent company, and of the debt there's about 350 million which is parent company debt. So stripping, and actually that's being rolled up into the principal there in the balance sheet. So actually, if you look at it, it's a good business. It's got healthy margins in it, or it appears it's got healthy margins in the business. It appeals to quite a wide demographic. That Pizza Express tend to be quite busy restaurants if you go in them. They're saying 95% of their stores are actually profitable, so they don't need to close the stores. They do need to do something because the debt's repayable. Half of that debt, more or less, is repayable by 2021. So they need to figure out that essentially whether that's converting the debt into equity, whether it's the parent company pumping more money into it, or closing some or franchising some more of the stores. Essentially, they laden the company with debt when the buyout happened a few years ago, and they've been aggressively expanding into China using some of that capital. But obviously, the consumer market's changed in the last few years. Their margins have been eroded. Still a lot healthier than Jamie Oliver's. Jamie's Italian, to be perfectly honest, if you look at the numbers. Different business model. I like Pizza Express. I think it's good. Hopefully they figure it out. But I think, it's all come about because they're looking ahead and looking responsibly as to what they can do. So
yeah, plenty of takeaways there. To finish off, No Account for Taste this week. Tom, we're going to go over to you for the biggest story from the last week, which was authored by a certain Tom Herbert.
Indeed, yeah. Well, I started off initially trying to answer the age-old question: what did the pirate say when he saw the tax avoidance legislation? IR 35. No. Okay. Anyway, back in focus now. It was the not-so-shocking news from the world of banking that Lloyds had followed Barclays in declaring that from next year they won't be taking on contractors who use their own personal service companies ahead of the introduction of the new off-payroll rules for the private sector that come out in April. And actually, I've just seen today that Tesco Bank have also followed in their footsteps. More details on the site about that. Depending on who you ask, it's either an extremely sensible decision to ensure compliance, or it's a breathtakingly short-sighted decision that will force complexity on businesses and undermine the UK's flexible labour market. There are obviously no nuances in between. Sort of depends on who you speak to. As I said, I can understand the bank's sort of arse-covering exercise, particularly with other sort of areas like AML compliance, where we're sort of hearing about potentially massive fines coming down the line for them in that area. So, yeah, there were two things I found interesting about this: how it will affect the contractor market. Will net pay stay the same? Will it go down? I'm guessing it's not going to go up, because I guess when the public sector rules came in, IT contractors in particular could say, don't work for the public sector, and that would be fine. But now they don't have much of a choice. And also how this affected firms with a significant contractor client base when all these changes first started coming about under Gordon Brown's chancellorship. I think it was manna from heaven for a lot of our readers who were charging those sweet incorporation fees. But now the wheels turned, and they're looking to make up for some lost income. So yeah, it all depends what direction we take ultimately. But Ariana, I think you attended an IR35 conference recently.
Yes.
What did you make of this?
It's obviously not surprising the government want to bring the public sector in line with the private sector, because I think there is a level of it's seen as unfair, I guess. But something that a lot of people don't know is that the contract with the personal service companies with the private companies is key in this. I think even HMRC say that out of all personal service companies, only 30% of them will actually fall under these rules. So there is a big hype about, this is going to kind of destroy the market. But out of those 30%, only 10% of them are actually applying the rules at the moment. But it's not surprising, obviously, that the banks, with their compliance and money laundering and all sorts of regulatory things that they have to comply with, that they're going to go down this route. But I don't think it's going to be as bad as people think at the moment. As long as their contract that they've got in place kind of satisfies certain rules, then they should be okay. And there's a lot of case law on it at the moment, actually, where HMRC is losing quite a lot on these cases.
Yeah, and they've been talking about, they obviously have this sort of check employment status tool that has been deemed by quite a lot as being inadequate. I think they're planning a new release on that later in the
just
year.
Before, maybe a day or two before even, which is not that helpful.
Yeah.
But I think the private sector, one issue they're going to have is because it's obviously the engager's responsibility to determine whether the personal service company should fall under PAYE rules or not. Those engagers will not necessarily have the resources in order to check the statuses. They can't afford an advisor. They don't understand it, even if they do go on to HMRC's new CEST on the website. The way that it can be interpreted, I see that there will be some issues there and some scope for HMRC to possibly win a few cases, but I think that will be the biggest issue for the smaller enterprises.
Thanks both, and I'm sure this topic will come up again in a fortnight's time when we'll be joined on No Account for Taste by Richard Hepburn, the operations manager at Gorilla, and the ethical accountant Tessa Hebditch. But until then, I'm afraid that's all we have time for today here at Flinder. So thanks very much, Ariana, for joining us, and Alastair as well for welcoming us into Flinder HQ, and thanks, Tom, for joining us as well. Back to your marmalade sandwiches, indeed. Anyway, now we're off to have a look around Flinder and perhaps nick a Flinder mug and add our name to that.
We've got some hats you can have.
Anyway, where do I sign up for that ski trip, by the way, Alastair?
FlinderTakesApiece.com.
Anyway, thanks everyone for listening, and we'll see you again on No Accounting for Taste.